So I just started the recording, and yep. So hey everyone. So as you guys know, this is Finance Meets Real Estate. We meet here every Tuesday, 6:30 p.m. Eastern time. And 7 p.m. works just as fine. And so we have like amazing guests here every week. We have live webinars. It goes on our YouTube channel, Finance Meets Real Estate on YouTube. Make sure to join us there as well. So we have a great guest here today. It's Jimmy Woodard. So he's the co-founder of Cloud Castles, and he's going to discuss why short-term rentals are a great way to generate cash flow and generate revenue. And so he has taken the time essentially to build a thriving short-term rental business. Now, I have done some short-term rentals myself in the past. I know it's not an easy thing to do. It's very challenging to build up your processes and make it into an actual business. So I'm very curious to hear what he has to say here today. And Cloud Castle specifically is a real estate investing app that lets you buy snackable shares of vacation homes that you can stay in and earn money from. And yeah, so I believe, so Jimmy met his co-founder at Berkeley, right? Where you guys did undergrad there?
We got Brian here as well, but yes, we met at Berkeley.
That's cool. That's awesome. And yeah, so you guys work in the tech industry too?
Mm-hmm.
After this? Okay. Sounds great. Sounds cool. And yeah, so anyway, so with that, I'm gonna pass it on to Jimmy. And so if you guys have any questions at any time, feel free to you can put them on the chat, or you can also just speak up. So we do a presentation. We open up for Q&A at the end as well. So yeah. The floor is yours, James.
Thank you for hosting us here. And I know we have an intimate group, so we always like to get to know the people that we present to. So if you guys don't mind, we'd love to learn a little bit about each of you, just in terms of your name, where you're zooming in from, and then your real estate experience, just so we can make this contextual to where you're coming from. So Scott, do you mind if we start off with yourself?
Sure. Can you hear me?
Mm-hmm.
Cool. So I'm Scott. I'm from Scottsdale, Arizona. No relation. And I've been investing in real estate for about 11 years now. Done a little bit of everything: smaller house flips, big luxury flips, some new developments, some commercial deals. And I did get in the Airbnb business from 2017 through 2020. I got out of it in 2020 because, admittedly, I just got a little spooked by
pandemic. Right?
I thought that would be the end of it, but I'm looking to get back in. So that's why I joined this one. And thanks, Stefan, for putting it on. Looking forward to it.
Awesome.
Thanks, Scott. Yeah, great profile.
Richard, I have you next on my screen. You mind telling us a little about your background?
Yeah, I have about 10 years of real estate, just basically investing. I do Airbnb, and It's doing well. I enjoy it here in Ontario, California.
Awesome. Well, welcome from Ontario.
Thank you.
We're getting even more guests here, so this is great. But Crystal, I have you next on my screen. Well, Crystal might not be actually here. Carrie, are you in the building?
Yep. Hi, I'm Carrie. I'm in Columbia, Maryland.
Nice.
Yeah, and several years ago, I started my investing in real estate by going through a mentorship, and ended up with my late spouse. We bought a mobile home park.
Okay.
As a result of that, through the illness from my late spouse, we ended up having to sell it. But I now do passive investments as an LP, but I'm always looking to learn. So I love these get-togethers and the information. And so looking forward to hearing what you guys have to say tonight. Thanks.
Yeah, we love being on these as well. So it's great to meet you, Carrie. Now I'll ask one more so we can get started here. But Beth, tell us where you're calling in from. Oh, did we lose Beth too? Okay. So
sorry, I just was getting my mic.
There we go. There's
Beth here from the Boston area. I'm I'm new to real estate investing. I am an angel investor, but I haven't done any in the real estate field.
Awesome. Well, glad to have you here. So we're going to talk about real estate in a second. And Stefan gave my background, but Brian, do you want to go ahead and introduce yourself?
Yeah, I'd love to. Great meeting you all. I'm Brian Marks. I'm the CEO of Cloud Castles, and we're going to talk about it a lot today. So you'll learn a little bit more about what Jimmy and I do. So great to meet you. We both met at University of California, Berkeley, a long time ago. I don't want to date ourselves, but we were friends for a while.
We're not that old, man. We're not that old. But all right, so I'm going to go ahead and share. Oh, wait. Stefan, do you have host access so I can share my screen?
Yeah, just 1 second. I need to figure out how to do it on the
While Stefan does that, I'm going to walk you
on this device.
Cover today. I'm sorry, go ahead. Oh, I was just going to say what we're going to cover today is basically, so Jimmy and I do. Jimmy and I do a lot of short-term rentals through our company Cloud Castles, and we're trying to take a new approach to how your average investor gets into real estate. And so we are coming from the tech background, so we're trying to take, frankly, just a more automated approach to everything. And what we want to do ultimately is democratize access to real estate so anyone could get in. We believe it's the best way to build generational wealth for folks. And fundamentally, it's part of the American dream is owning real estate and something that is so important to so many people out there. So we want to lower the barrier to entry to real estate so anyone can get in and really democratize fractional ownership for everyone. So we're going to walk through a lot of that today. If you guys have any questions, please feel free to jump in. We'd love to get your feedback, engagement, and hear what your experience is with real estate, whether it's very little or a lot, and where your concerns are. What's preventing you from joining the industry of being your own building your own real estate empire and building your own passive income. So we'd love to hear it all.
All right. So were we able to get the screen share fixed?
Yeah, you can. You should be good,
Perfect.
Jimmy.
All right. Let me go ahead and share my screen. Everyone can see this here, right? Okay. Oh,
yeah.
All right. So this presentation around how to generate cash flow in 2022 with short-term rentals, that is our focus. And as you see here on the first slide, even if you don't have a lot of time or a ton of capital, that's why we exist at Cloud Castles, as you'll see in a second. So Brian and I are just going to bounce back and forth from slide to slide here. And as we go along, as Stefan mentioned, if you have questions, feel free to ask them. We'll also have Q&A at the end. So make this as interactive as possible. The last thing we want is for all of you to drone off or fall asleep on us. So just let us know if we're boring you and we'll try and make it a little more exciting.
Yeah, and feel free to throw some questions in the chat too. If you don't, if that's more of your style, we'll get to those questions in the chat as well.
All right, let's go ahead and get started.
Mm-hmm.
So the way that we look at this, folks, is that we have a big problem when it comes to the real estate industry as it's currently run. And related to that is that the price of real estate is through the roof. As you all have seen over the last couple of years in the pandemic, it's gotten out of control. Now, the good news is it's starting to taper off just a little bit. But if you owned a property, you were in a great shape over the last 2 years. If you were looking to buy a property, it kept getting more and more expensive, as you have seen, most of you probably from firsthand experience, right? So that's what we've seen just as a backdrop into where we're coming into Cloud Castles, and may not change for a long time.
Just a little more context there. So the reason why there is essentially an inventory shortage in the US. So what happened is in 2008, there was, obviously a crash around the housing market. And basically a lot of developers who went out of business. Like there was a significant amount of the businesses that focused solely on building new properties went out of business. And there was a surplus at that point in 2008. At this point in 2022, we're still missing about 5 million single family homes from the market. So there is a fundamental shortage in the amount of single family homes available to US or global consumers who are buying in the US. So that's an important note because it's substantial. Like even if the government or anyone wanted to bring that number back up, it would take a lot of time to get back to 5 million. That's a large basically delta right there to get back to 5 million homes.
And related to that, even on a personal level, we've seen that for a lot of the investors that we work with across the country, short-term real investing may be out of reach. Now, most of you know it's not cheap to buy a house. You're looking at somewhere in the range of probably 50K on the low end, upwards of 150, 200,000 on the high end, just to get into one property. Now imagine trying to scale that. It's not a quick process because you have to have the capital to do so. Not a lot of people do. Related to that,
using
Brian.
just using good leverage, like that's if you have an amazing credit score, like 150.
That's true. That's true.
So really the property can be up to 1.5 million or beyond that. So it's important we'll talk a lot about leverage and how to use other people's capital fundamentally to get some of these properties.
Definitely. Related to that, this is not a set it and forget it long-term rental business where you can have a property manager place a tenant and then kick back. This is a true hospitality business. And if you don't have time for property management, then your guests are going to suffer and your revenue and profit will suffer from that. So we've seen a lot of other people who may have the capital to get into the space, but they don't have the time to actually run a short-term rental business, which is another big challenge. And then the third one, as you see on the screen, analysis paralysis. There are a lot of moving pieces to making a short-term rental work. As I'm sure some of you know, like Scott mentioned, he's been in the space where you have to make sure that if the numbers look good, that you want to move forward. But sometimes people get caught up in interest rates, purchase price, the cost for renovations, and they get stuck. So we've seen these three are the main reasons why most people don't get into short-term rental investing. But as I mentioned before, I want to make this a little interactive. So Scott, you mentioned you've been in the space. What are some challenges that you've had related to short-term rental investing?
There we go. So I had a property manager on all three of my properties, and one challenge was that she ate up almost all the cash flow.
That's right.
Another challenge is I annoyed a lot of my neighbors. So I had to mitigate that by putting in some noise protection devices in the backyard, to limit the partying and stuff like that. Another challenge is something was always breaking, the leg on a dining room chair or the gas grill out back or whatever. So those were just a few of the ones that I faced.
Yeah, and for those that don't know, if you hire a property manager, majority of them are going to cost you somewhere in the range of 20 to 40% of your gross revenue. Is that about right, Scott?
Yeah, she was at 25%.
Exactly. A lot harder to hit the numbers you're looking for to make it worth your while when they're charging that much to run your business. Now, what we teach and preach here at Cloud Castles is that you can do this for a lot less. For our investors right now, because we're still an early stage business, we only charge 5%. So we try to practice what we preach and help investors so that at the end of the day, you're making money from this passive investment instead of worrying about how much money is going out the door to a property manager. And to the neighbors, we have a funny story around that. But Brian, do you want to share any comments around neighbors and some of the things we've done to mitigate that?
Funny stories. Yeah. I mean, the neighbors we always appreciate them. And I think it's really important to be a part of the community with these type of things and take a really good kind of pulse of the neighborhood that you're investing in and make sure it's ultimately one that's going to support and have other people of like, who are part of the same kind of thoughts, kind of share the same sentiment around certain things. So I would say even taking a step back, I think a lot of these problems in a way can be solved by actually joining together and really working with other investors as a pool. And, let's say, back to Scott's example, let's say you put in all your money and hard work into one house, and then the house has neighbor issues, it falls apart. It's actually, as the bathroom falls apart, the water breaks on it. You're fully invested in that house, and a hurricane comes through Miami, whatever it is. And you're fully invested in that one property. What you could do is split it up with maybe everyone on the Zoom. And so you all share the load across a larger portfolio of properties, in which case you would all kind of win because you would all share both the benefits and like shoulder each other's burden throughout that process. And that's kind of our thesis around Cloud Castle, is that we're gonna basically, we have a system to enable investors to benefit together. So
Definitely.
but there's a lot of challenges in the industry. I think it's very clear to everyone on this call. Like if it was really easy, everyone would be doing it, you know? And everyone's not. Can you jump to the next slide, please, Jim?
Of course.
So that's actually why our business does exist. So if you have a ton of capital and you're more of a high-end investor and maybe 100,000, 200,000, $500,000, not a big deal to you, then we're probably not the app for you. But our business is fundamentally what I just described, and that's working together with other investors in an insulated manner to basically hedge your bets against multiple investments at once, as opposed to only going in on one property. And there's a few different ways we approach that, which we'll walk through right now. But at the end, we're an app on the App Store.
And for anyone that wants to volunteer, because I won't call on anybody unnecessarily, but if you haven't been in the space, do you mind telling us, because we always love feedback, as to what has stopped you up to this point from investing in short-term rentals, for anybody that wants to volunteer? If you don't hurt my feelings either.
Well, I can say actually, guys, for myself at least, in the past, I've done like perhaps like few units of Airbnb in the New York City area. And I feel like what was my observation was I was kind of seeing like really strong performance at kind of like more unique, let's say unique properties or unique units. And then whenever it was kind of like a really kind of like fitting what everybody else has was doing like not so well. And I felt like kind of I felt it wasn't worth my labor for that portion of the portfolio. So there is a little bit of this initial decision making where you kind of put a lot of effort to set it up, but don't necessarily know if you're actually executing the perfectly well-tuned strategy where, perhaps, perhaps you should have selected only those 2 units, or, like something like that. So
no,
like,
you're on the right path.
Challenge for me.
And we'll talk about that. So I'm going to cover acquisition, and then Brian's going to talk about renovations. But your point is spot on. This is not a build it and they will come solution. You have to have amenities that stand out from the crowd. And so we'll talk about how we handle that here at Cloud Castles, because we know it's such a huge part of success in this industry. But before we even get there, let's talk about how this works with us, because we put a lot of effort into the front end in terms of acquiring the best properties and and renovating the best properties. So everything you see here, from searching on Zillow and MLS data that we receive, machine learning for Brian, guys, I can't code for anything, so Brian is the tech wizard on our team, to utilizing comps like AirDNA. Rabu is a great one for any of you who are in the space. You may not have heard of Rabu before, but we love this tool as well. To everything from regulation research, because as you all know, not every city likes Airbnb. It's all a part of the process that we help do on behalf of our investor base. So this is literally something that will take hours, where for us, we'll do it for you. So it's something that we help with. Any questions here before we go forward?
Yeah. What kind of machine learning? I'm just curious.
Yes. So funny enough, the actual machine learning is not the hard part. I mean, like it's a lot of different models you can use to do pricing predictions based on public data sets, or like you can scrape Airbnb. I think the trickier part is finding accurate listing data. But at the end of the day, it's kind of a trivial data science problem for like at least predicting somewhat accurately based on historical trends. Like, and right now, I think right now in the US, there is a house on the market that will make the highest return in Airbnb or short-term rentals. And our job is to find that house. And our job is to find that house and actually give that to our investors. And that's what we work on a lot is how do we actually narrow in and filter them? Because, you know, you could have two houses side by side, and frankly, over the next 5 years, one will make, you know, 2x your money, 3x your money, and the other one will be, you know, kind of a lemon, and will like have a lot of issues around it based on comps, based on structural issues, based on market trends. So you have to take all those into account. And so the model, the actual prediction model is a small component of the larger picture of which is acquisition.
And do you guys use like different, I mean, sort of like, I don't know if maybe we haven't got into that, but sort of like some of the computer vision stuff and that, or like, I'm not sure, partner with other companies, just as an additional idea, perhaps, if you've gone that route or no, as far as, because it seems to me like you need to kind of target on like unique properties, right? And kind of identify their sort of special characteristics that are going to kind of, you know, differentiate them from the rest of the market. And
yeah, let's talk about how we differentiate.
Okay,
So Brian, you can go in and explain this side here.
Yeah.
Yeah, so when you're doing short-term rentals, photos are kind of everything. Both photos, like,
Yeah.
well, when you're actually reviewing the property, photos can be a little bit misleading, to be honest. It's when you actually do the Airbnb listing, photos are everything. So they're kind of different in a sense, but ultimately the rehab is hyper important. The amenities are super important, but a larger component is location. Another component is bedroom count. Photos are a lot. The listing has to be accurate. They're typically, really, it's about comps at the end of the day. So what I mean by that is, yeah, you might have the sickest house that you can think of, but if there's 20 other sick houses like you in a neighborhood that actually doesn't get that much traffic, then guess what? You're not going to make any money. So it's almost better to have a pretty good house in an area that doesn't have any houses and have a okay pool in a place that doesn't have any pools, and you'll make a lot more money because you're actually just standing out from the crowd. So the big thing here is differentiation through both amenities and then the choice of which home to acquire.
And we'll go into more detail in a second about our specific properties that we have up and live. But just in terms of the renovation aspect, does anyone have any questions on this? Okay.
Well, I guess,
go ahead.
Just one question I had. Do you guys, so you do it, like, you focus on like a set of markets, or given like where you have how that works? And what's your coverage?
That's a good question. So we are not market dependent, because what we care about is the return at the end of the day. And the other piece related to that is diversification is huge. So I would never tell somebody to have all of their short-term rentals in one market, because as Brian mentioned earlier, if a hurricane came through Miami, there goes all of your revenue, right? So we're dispersed across the country between Tahoe, Miami, Gatlinburg, and we're soon to launch in Kissimmee and Tampa, as we'll talk about later on. But the idea is if we see a market that works, great, we can dive in deeper, but diversify so that you are not risk dependent. If regulation or weather gets in the way of one of your properties, it doesn't affect the rest of your portfolio.
That makes sense.
Hi, I have a question.
Yeah, go ahead.
Hi, my name is Fauska. I'm from Houston. I joined the investing industry about a year ago, so I have been dealing with analysis paralysis.
Yes.
Yeah, so my question is, this is the first time I'm attending your group, and I just want to make sure I understand. You are basically mainly short-term rentals, no flips or any other kind of rentals like single homes. It's just the short-term rentals.
Right.
Correct?
So for right now, our focus is on short-term rentals, but we do have other strategies beyond just buying retail, right? So Fauska, are you familiar with the BRRRR strategy at all?
Yes.
So and you'll see that on a slide coming up soon here, but that's how we acquired our Smoky Mountains property over in Gatlinburg, Tennessee. So for us, at the end of the day, it's about the deal. And then Brian can speak to, long-term vision. It's not just going to be single family, but I'll let Brian touch on that.
Yeah, it's a great question. I think the reason why we chose short-term rentals is because they do have the highest earning potential. I mean, there's a set price you can make per house. That's just the reality of the situation. Single family homes, multifamily, there's a set price you can make. Even in the best market conditions, there's a set price. There's a maximum. There's a ceiling there. The short-term rental is a little bit higher. It's about 50% higher on average than long-term. And then also, it's important to note that like you can automate it a lot out. So it can be very secure as far as how your income is actually generated. So are you particularly leaning towards like one type of rental market versus another, or what are your thoughts around short-term rentals?
Sure, yeah. It would be single family homes in the Houston area.
Okay, cool.
Yeah, we have
Yes.
another investor that is also looking at Houston. So to Brian's point earlier, we like combining forces here, so we can definitely chat after if that's of interest to you.
Yeah, definitely. Thank you.
And one takeaway, what we do at Cloudcast is we basically group investors together to, again, share the load and also mitigate risk. So if, for example, yeah, like I like Houston a lot, or maybe I want to get in that market, but maybe I don't want to put my whole life savings into Houston. Maybe I want to actually just put a little bit in there. We'll pair you up with other investors who have like-mindedness, who can all invest together, where our business Cloud Castle is the central entity, just insulating it and acting as a fair neutral party between all the investors there. And then also doing a lot of the management, as well as the maintenance and upkeep and marketing, and et cetera.
So you'll see something to that towards the end of the presentation, but yeah, but that's our job, is to make it easier for everyone to invest in this space and not have to do it all by yourself. So to go through this slide really briefly, it's as simple as what we talked about earlier with Scott paying 25% to a property manager. We're going to do that for you here at Cloud Castles. For as long as we're crazy enough to charge just 5%, that's what we charge right now. And we handle all of this. So you're looking at the guy that has the team behind each of our properties. So if something happens at 11:39 p.m. on a Friday night, then I get the ping, and it's my job to make sure that guest's problem is taken care of. And honestly, for all of you that are thinking about doing this yourself, if you have just one property, it probably will not be more than an hour per week that you spend if you set up the right systems. So a lot of people don't set up the systems that can automate away a lot of the questions that you'll get from guests. But that's what we teach as well, because we have an educational component to our company. So even separate from investing with us, if you ever wanted to know how do I self-manage, happy to set up some time and talk, because I love talking about how to manage properties for success. So any questions on managing before? Oh, Brian, you have a comment there?
Sorry, I do, but any questions on management process?
Yeah, just any questions before Brian makes a comment.
I have a question regarding, I know you mentioned that you also do acquisition in your group. So does that mean that your group members get to have you acquire properties for them? And then how does that work?
It's as simple as you tell us how much you want to invest. If that doesn't cover the entire investment amount, then we go out, find other investors who want to invest in that same market, pull resources together, and then we help with the closing. So we try to make it as turnkey as possible for our investors. So this really is a passive investment, instead of you having to spend a lot of time going through the whole process.
So you would be acting like wholesalers, or just acquiring the property and passing it on for the investor to actually evaluate it themselves?
You could describe it as like Airbnb ownership as a service. So it would basically be, hey, enter in either via the app. We basically enter in an agreement of how much you want to invest and where, and then we would provide everything from there on out, so you get a passive income following that.
And we'll also, to your question, Fausto, we also usually put some money into the pot in terms of being an equity owner, because we want to have some stake in the game. That's part of the reason why we only charge 5%, because usually we're putting up some amount of money to make sure that we're aligned with our investors, right? We're not a property manager. That's not just what we do. We are also invested in the success of this property. So we'll usually keep some equity along with whoever else wants to invest in the property. Make sense?
Thank you. Yes.
All right.
So, sorry guys, just for my understanding, so it's not, so just so to say, so Airbnb ownership as a service. So you guys don't, it's not like an SEC offering. It's not a private SEC offering. It's in a syndication or other offering of this sort to investors. It's more like they become owners of it, and perhaps you're sort of equity partners to them, and you provide a service, sort of operational service to them, and various technology service and so forth.
No, it still falls
that
under
fair?
SEC guidelines
It still falls.
from
Okay.
what our lawyers have told us. So it really depends on the project,
Okay.
because as we mentioned earlier, we've acquired properties in different ways, but yeah, we still try and follow SEC guidelines to the best of our ability, because we're not trying to get in trouble on that side.
No, and understand that, but just more like it's a concept. Like, is it like kind of investment management concept, or to your point, or it's more like, okay, kind of providing a service to other owners, of sort. I guess it's a little bit of a nuance where perhaps the two overlap often, but still. I'm just trying to understand the business model, because it's a very interesting one. Actually, yes, it sounds very great to me.
The simplest way to describe it is it's basically a private placement memorandum spun up per house.
Per house, yes.
It's more it's more arbitrage around everything. So, oh, sorry. I think there's a question from Richard, but he might have left. But anyway, so it's just a PPM at the end of the day per house, and that's the that's standard SEC approach to investing in fractional ownership.
Yeah, so let's jump in and see what some of these look like.
For a single house, right?
Yeah.
It's not like a fund though. It's a single house, but you can then achieve some diversification by just investing, opening another PPM with you guys and so forth.
That's right.
So each one is its own unique entity that you can invest as much as you want in each one. So they're all protected from each other. They're all separate investments, and you can do some arbitrage, I guess, to Richard's question around like, hey, actually, is one market going to do better than the other? Is Tampa going to do better than Disney? You tell me. Actually, if you know right now, let me know, because we have properties.
Fortune tellers, right?
Yeah, we have properties spinning up in both, and we don't know which one's going to do better, frankly. But we're doing really, we're working really hard to make sure they're both successful.
But in terms of the ownership for the people who invest, are they limited partners, or what kind of, that's their status in that sense?
And so we make everyone a member. I know it's going to the weeds a little bit for folks, but everyone becomes a member of the LLC, right? So you get legal protection behind owning this property. And we make sure that, as Brian mentioned, every property has its own LLC, its own PPM. So if you invest in a property, then you are one of the members. You get membership interest in this property.
Okay, got it. Thank you, guys.
No problem. That's what we're here for. So to give you all some examples, and I'll jump out for the next one and let Brian kind of walk through what he did on the renovation side. But just to give you everyone some examples here, for Lake Tahoe, which is our very first property here, about 3 hours outside the Bay Area, for those that aren't familiar with where Lake Tahoe is. Launched it back in December of 2020. Achieved over $135,000 in revenue since we launched it. So it's been a great property. We achieved a 22.4% cash on cash return in 2021. So which is our first full year of investment for this property. And we actually got an offer recently. So to our point earlier about regulations, sometimes they change and it's not in your favor. That's why it's always important to have an exit strategy. So ours for this particular property is to 1031 exchange it with about 100K in equity that we achieved from the price appreciation, and roll that into a new market. So even in the case where we may not stick around in the market for very long, we either will have a strategy for a long-term tenant or sell the property if there's enough appreciation. And Tahoe has been a great investment for our very, very early stage investors who started with us from the beginning. Any questions on Tahoe before we jump out, and I'll show some pictures around Miami?
Well, I have a quick question answer, guys. So just so in picking your markets, how do you go about kind of finding the latest? You just kind of dig into the regulation as to whether, how much Airbnb is permitted and so forth. in that market, or do you guys have sort of a database of, sort of like a regulatory database of sorts?
Yeah, a lot of regulatory database, and we try to track which areas accept local tenants. Basically, there's a few ways to approach it. There's no regulation, there's like strict regulation, and there's minor regulation. Typically, you want to enter into a market that has like minor regulation because it's already established. If there's no regulation, they can switch very quickly to strict regulation. So you want to enter a market that has pretty clear guidelines on what they expect. And then also, there's just like inherent kind of like, you can kind of get a read of the land a little bit. California, in all honesty, in my opinion, this is just my opinion, is not a very well-run state. And frankly, I think that shows that in the numbers is California actually had, for the first time in the last like 50 or 60 years, a decrease in population from people moving out. And a lot of their regulatory entities were not super well run and kind of frankly just very difficult to work with. So we ultimately decided to sell this property, even though it was very profitable, because it was just starting to not make sense from a number standpoint. So you do have to choose be very selective in what neighborhoods you enter. And most real estate investors in the single family space will go towards the Sun Belt. That's where the majority of Americans are migrating towards, based on the fact that the weather's good and also the housing prices are low. So the Sun Belt is basically Arizona all the way over to the Carolinas at the end of the day. So that's where we focus our investments on primarily, but we do want to accommodate our what we call alpha investors, which are our primary investors, or folks who are willing to be the first investors in a cloud castle. And so if they're interested in a particular market, it might be the Poconos, it might be Reno, it might be
Houston.
It might be Lexington, Kentucky, where they have a bourbon themed Airbnb, bourbon drinking Airbnb, and have a good experience there. It might be Vegas, where they want to speak easy Airbnb. That's going to be a cool experience for end users or end guests. So we really do want to go where folks want to find the most interest. Carolinas, yeah. Janelle, Carolina is a great area. Lots of potential in both South and North Carolinas.
Yeah. So jumping in, and this will be the first time to come out of the presentation here. So I'll show everyone just an example here of one of our properties, and I'll let Brian walk through, because what you will see in some of these pictures is not how this started. So Brian, you want to kind of walk them through what we added to make this into a high achieving property?
Yeah, so to be quite frank, this property is a cash cow. Every investor who's invested in it is like making consistent monthly income and doing no work. So this pool was added into this Miami property. Behind that is basically more like a reserve, which is kind of nice. You get a good experience. So the pool was added. It's actually was fairly affordable to put in. That's nice Turkish limestone. They told me it was Greek, but apparently it's Turkish limestone, no big deal. And we had a pergola. We renovated a lot of the floors. That's about a 60 or 72 inch television on the wall for games. It's really popular. You can see it's really nice. Actually, scroll up. Sorry, scroll up a little bit more. No, sorry, scroll back down. Missed it. Anyway, we have a fire pit. You always want a good shot to have fire and water in the same picture. Keep scrolling down for me. So it's a 4-bedroom, 3.5 bath. So it's we get a lot of bachelorette parties, to be honest. We get it's 2 kitchens, which is also nice. That heart right there was custom made. That's about a 9-foot wide heart. So you get a good experience in the house. And frankly, like some months we'll pull away with like close to 20K in revenue. Also has a movie theater room, as well as a backyard, front yard, all that good stuff. So this is one of our better kind of lighthouse properties. And I think we bought that in March of 2021 and started, it was about a 2-month turnaround. And then we've been cash flow positive kind of ever since.
Yep. And then to the BRRRR strategy that Fausto and I spoke on a little bit earlier, we bought a property off market in Gatlinburg, Tennessee, and we just launched a month and a half ago. So not too long ago, already had $14,000 in book revenue so far, which continues to grow. But the real piece that makes this such an attractive investment for us is the fact that once we refinance, we will potentially recoup 100% of the costs that we put in. So that's the power of not just focusing on retail strategy, because if you can find a great off-market property and there's enough equity arbitrage in play, then you could essentially have an unlimited return because all of your money has come back to the cash out refi. So we're really excited for that refi coming in July, and we're just going to roll that right into the next property from there. So any questions on any of our live properties before we move on here?
So you guys essentially, okay, no, go ahead.
Okay, so my question is just, since all three of these properties are located in very different places, how are you guys going about managing things like the cleaning crews or handymen or contractors, things like that?
Yeah, it starts with systems, right? So I mentioned that earlier. Guesty is one that we use, but OwnerRez is another great system where you can track everything across all of your properties a lot easier than trying to piecemeal it one by one. And I will tell you, Scott, it was not easy for any market to find a great handyman and a great cleaner. Usually you'll have to cycle through a couple before you figure out this is the one that is bought into our vision and it's going to make my life easy to manage it from afar. Because once you have the handyman and you have the cleaning crew, they are going to handle 95% of any issue that comes up in your property. And then that last 5, usually you just get a specialist, whether it's a plumber or whatever else comes up randomly. But it's really just around setting up the system. So I recommend Guesty to everyone watching, and then just finding your local crew that can really make it seamless for you to manage from afar when you get a guest reaching out. Great question there.
To what extent, guys, are you, let's say, aiming to generate, let's say, a BRRR kind of return to your investors, or is it primarily more focused on the cash flow, which, you know, now obviously with STR and efficient management, that is a very strong value proposition there. But considering you do have that strong value proposition, to what extent you guys have focused on the equity upside and kind of like discovering a discounted property and all that for your, I guess, investors or members as owners in your like Airbnb as a service offering? So
yeah, I can take that. If I basically our approach is we are focused on cash flow. We actually, the end goal of Cloud Castles, one of them at least, is to be more of a marketplace. So let's say, you know, Scott goes out, he buys a house, he does all the work, he gets it on Airbnb, and then he wants to liquidate for some event. That's a process to liquidate real estate, as we all know. It's difficult. And what we hope to do is actually build more of an automated, like kind of eBay marketplace where folks are basically can liquidate at whim. So they can set their price. Like if someone wants to liquidate their property or just a portion of their property, maybe they want to just liquidate half their asset, they can do so on our marketplace and just sell to other users at a price they determine. So to answer your question, like directly, like we're not planning on, it's expensive to onboard a house onto our platform. It's just a time commitment wise, which is more important than money. So it's expensive to onboard the house on the property. And so we actually don't want to turn around and sell the property often and kind of offload off the market, off of our marketplace. We want to just have individual users selling between each other. And that's faster. It's a faster liquidation process and a more flexible liquidation process.
Are you guys looking to do that on the blockchain potentially in the future, or looking into like tokenization and things like that, or perhaps like next?
Brian's smiling because we had conversations around this a little bit earlier this year.
Yeah, it depends on what the SEC wants to do. If the SEC wants to come in and say, yeah, everything on the blockchain is also like subject to different laws.
Sure.
There's actually very favorable real estate laws in the United States, very favorable. And so, for example, we can write off a ton of depreciation, and you can prove that you had negative or a ton of like negative income on this property, even though you did take home money in the United States. It's designed the profitable for landowners. Fundamentally, that's been around for hundreds of years. So,
True.
yeah. So it ultimately depends on what the SEC does. If you tell me, if you find out what they do, let me know, and we'll make a decision from
There we go.
there.
All right, for the sake of time, I know we're
Okay, good.
almost done here. So just to get through the rest of this deck, we have more markets. We always have more markets because we're always working with new investors and trying to figure out where to go next. So as we alluded to, which you all will see soon, Disney World in Tampa going to launch soon. We're actively looking in Vegas, Scottsdale, Hawaii. Houston's not on this list, but there are many markets across the country that we are actively looking in. At the end of the day, if it's a good deal, we want to do it. So that's our philosophy around finding good deals and working with great investors. So in terms of benefits, you got a lot, which Brian can talk through real quickly here.
So basically, at the end of the day, our business is to mitigate risk for investors while providing a really easy, low effort solution. So a lot of that. So as we mentioned with these properties, every single month there's a profit we pay out our users based on their ownership. So if you put in, $25 and you own 0.01% of this property, you get your return. If you put in 25,000 or 50,000 or 100,000, you also get your share of the return. It's all paid out through the app. That's trackable. You actually, one of the benefits, I think, in my opinion, of owning vacation real estate is to go vacation at it. So you do get discounted stays. If we know it's a slow season, we try to get we want all of our investors to stay at their properties at least once. So we give them discounted stays where they can stay there for next to nothing or just cleaning fees only. And it's a good experience to go to the house you own and kind of experience it firsthand. Big benefit here is, if we all bought a bunch of houses together in different markets, we would all benefit by diversifying our portfolio as a whole. So, we might buy in Houston, we might buy in Scottsdale, we might buy in Poconos, and we would all kind of mitigate risk by kind of sharing the load together. And again, this back to our core mission of democratizing real estate and ultimately giving more people access to real estate, which we believe is fundamental in building generational wealth. One of our big approaches from a software standpoint is to identify key properties. Like I mentioned, in the US or in the world, there's a house right now that's going to make a ton of freaking money on short-term rentals, and our job is to find that house and basically sell it to the rest of our investors. And lastly, as we talked about, Stefan, obviously a pro on the SEC side of things, asking the tough hitting questions. There's a ton of tax benefits to owning real estate, a lot of tax benefits, and we supply that to our users. So you get a K-1 at the end of the year describing exactly what was the breakdown. You just enter that into your H&R block or TurboTax, and you get a tax break for owning real estate. If it was crypto, it would actually be subject to different taxes, which would be less favorable, unfortunately. So a lot of our investors prefer that it's real estate.
So any questions here, folks?
Well, okay, it's me again. So for the
We love it.
multi-payout,
You can ask all the questions for the audience.
Right.
We'll handle all of them.
Right. So, and I'm just very curious because you guys have a great thing, and I really like it. And so for the monthly payouts, for instance, so you guys, do you distribute the full cash-on-cash return, or is it sort of like a preferred return of sort that is offered there? I'm not sure if you guys heard my
Yeah,
question.
kind of in and out a little bit, but I think I know what you were asking. Yeah, we distribute the full amount
Okay, yeah.
in the app. And then that gives some options for our user base, right? So as Brian mentioned, let's say you wanted to stay at a discounted rate, you could use that payout to fund your time going to the property. Or if you wanted to reinvest that, you can also do that through the app. Or if you just wanted to cash out to your bank of choice, more than happy to do that as well. So we give people options in terms of how they spend their payout.
Got it. That's really cool. But if they choose, it's really, they can collect, let's say, the 22% cash-on-cash return. And let's say let's say it's 20%. And so you invest $25, you'll get $5 sort of per year, per annum or whatever. So you'll get like $5 divided by 12 is going to be your monthly profit payout in that case.
That's right.
Okay, clear. Got it.
Now, one thing I'll say to that point, it's not always linear, right? Because in the short-term rental space, it is seasonal. So for those who have never invested in the space, in certain markets, you may make 60% of your profit in 1 month, because that one month could be the Poconos or could be Lake Tahoe, where everyone's going to ski and they're only going to be there in December or January, right? So in certain markets, it's very seasonal. Other markets like Miami, where you have high tourism numbers, you're going to get consistent profit across the year. But just something to think about for anyone looking to invest in this space.
Got it. Yeah, that makes sense. And just from an ask at the end, my question, it's okay.
Okay, yeah. So as we alluded to, best part here, you do not have to spend $50,000 to $100,000. Now you can. We do have investors that have done that, but as Brian mentioned earlier, you can own a cash flowing short-term rental for $25,000, $2,500, or even $25. So that's where we can get into how do you get started here. I'll let
one point I'll have Jimmy real quick is that, a lot of folks, will have conversations and they'll say, we'll start talking about our vision here and what we're trying to do. And they'll say, okay, I have $200,000 ready. And we're like, okay, great. That's fine. But we actually don't need $200,000 right now. What we want you to do is have a good experience and feel really confident working with us to get these properties going. So let's start with 25K. Let's start with or less or more. And so let's get to a point where you feel very comfortable and confident. We build a really good relationship to go out and then achieve a larger portfolio for you and markets that you're more interested in. So, and I'm not even joking. I had a conversation with an investor today, just exact same thing, willing to do 200K, but I think it's really important for our investors to have a good experience with us. And our long-term vision is to grow this to a very large brand. With thousands of cloud castles.
So let's talk about the two that we have available right now. So for the ones that you saw earlier, they are all sold out. There's a positive problem that we have a lot of investors that we work with. So unfortunately, right now, there's no way to invest in Miami, Tahoe, or Gatlinburg. But we always have new properties that we're constantly onboarding onto our platform. So as of now, Disney World still has 50K worth of equity left. And then Tampa has 45K worth of equity left. So again, as we talked about before, we have an app both on the App Store and the Google Play Store. So if you wanted to invest in either Tampa or invest in Disney World, you don't even need to talk to us. You can go download the app, choose which one, decide how much you want to invest. Of course, we want to make this legal, so you sign paperwork related to that. And then you own your first cloud castle. And as soon as we launch, if we get a profit that month, you get paid out the next month like we talked about earlier. So that's one of our options. Brian will go into the alpha investor in just a little bit more detail in a second. But before we get there, any questions on how our app works or how the process works to invest in Disney or Tampa if you so choose? Okay, so Brian, and one other thing to note, we do want to reward people who showed up here today. So if you are watching this, or if you do watch it afterwards on YouTube, email us, support@cloudcastle.io. We will give you a discount because we appreciate people who take out time to listen to our presentation. So you'll see a share price on the app. Just email us. We can give you a discount because you showed up here, and we definitely want to thank you for taking some time out. But before we get to the very end here, I'll let Brian talk about our alpha program just a little bit more.
Yeah, thank you all for joining again. We really appreciate it. Hopefully this was helpful for y'all. It was awesome to hear about your experiences with short-term rentals, or maybe it's not for you. Maybe short-term rentals are not for you, but we do believe it's a really good experience, and it can be really easy to get into the short-term rental market. It's also great to go to vacations. So our alpha program is a little bit different than so if you're what we call a retail investor, you go in the app, it's very casual. You buy, you get your monthly payout, you get your return. It's all very automated experience. But if you're interested in a better return or working with us in a more sophisticated manner where you're working kind of hand in hand to find good properties, to find other folks who may buy, or just frankly get a little better return for what you want to do and kind of have a more decision-making process in the Cloud Castle. We invite you to join the Alpha Investor Program. At the end of the day, the Alpha Investor Program is very similar to the app experience. The only difference is we're working with you to identify the property that you, or the area that you want to work in, identify when renovations are going to be really good for the property, which you think you'll really like. And then also just giving you, frankly, a better return on your investment because you're the alpha, you're the first person investing with us. So just a quick example, Tampa is one property we're onboarding right now. We got it right by the Bucs Stadium, 15-minute drive. Tampa is one of the hottest markets in the US right now for real estate. And so we worked with the individual investor. He said, I love the idea. I want to work with you guys. We said, perfect. He brought a few friends and acquaintances along. We all gave them their ownership based on how much they put in. It was signed in the app, and then they can see their breakdown, their ownership, all the good stuff they need to see, and updates on how the app, monthly updates on how the property is performing. So that's our alpha program. If you want to get involved with that, please let us know. Next slide, Jimmy. You can just reach Jimmy at cloudcastles.io or myself at cloudcastles.io or support, or just download the app and just click the feedback button. We'd love to hear from you.
That's what we got, folks. Love to hear any feedback or questions as we wrap up here. But again, we thank you guys for all showing up here, and that's the idea behind Cloud Castles. So if you have any questions, let us know. But otherwise, that's the end of our presentation.
Yeah, thanks, guys. That was really great. I love what you're doing, and so just I have a couple of questions more. And like, if anyone else wants to chime in, actually go ahead. I don't want to kind of jump over that. Does anyone have any questions? Actually, feel free to go ahead, guys.
I just had a quick thing, and I want to see if I'm understanding this right or if I'm simplifying it or getting something wrong. When you guys first started talking tonight, I was thinking this is like a syndication for Airbnbs or short-term rentals, but the more you talked, it almost seems like it's a joint venture short-term rental setup. Okay.
That's right. So we take the investor first approach. So we work with you where you want to invest, and then we go out and as a joint venture find other partners interested in a specific property. So that's the Alpha program in a nutshell. Or if you want to be more casual, laid back, you can think of the app as, yeah, I just see these properties on here. Let me invest on my own time. So we have options for wherever you come from. The one thing to mention is that we do have a minimum for the Alpha program just because it's a little bit more turnkey. So it is $25K for that program. But again, there's no minimum if you just download the app and invest on there.
Let us know what work with you. It's just, sorry, go ahead.
I'm sorry. One thing I was just going to add as you were talking, one thing I'm really big on, I have a teenage son who sees me in meetups all the time and on meetings and like, Mom, I don't want to go to college. I want to do real estate with you. And he just graduated high school last Sunday.
He's ahead of the game.
What's that?
He's ahead of the game then.
Exactly. So as you're talking, I'm thinking, when you say no minimum, I'm like, this is a perfect entry point for like young people, way younger than us, to get their ball rolling in their real estate, building their real estate empire, right?
Now, I will say by SEC laws, we can't take money from anyone under 18. So if you invest through you, you're perfectly fine.
Well, he just turned 18 a couple months ago. So
okay. He's a grown man now, so he can make his decisions. That's right.
This is great. Okay.
Thank you, Janelle.
Yeah, thank you for the feedback, Janelle.
Thank you.
So essentially, your app is a syndication, and your sort of your Alpha Investor Program, that one is a JV sort of.
That's right.
One can say high level.
Kind of like a reverse syndication, right?
Like other
yeah, exactly. So the app is reverse syndication because we already have the property. Okay. And then the Alpha is JV because we're coming together to buy the property.
Okay, I see. Got it. Okay. And in terms of like just another, I just try to understand it a little bit better. Like suppose like I purchase another property, like not through your like system, right? And so there's an asset manager, there's a property manager. So essentially that's like labor that goes there, right? So you guys are at least at the initial stage, you guys have this extremely attractive offer of, like 5% of the deal, right? Which is really great. I think it's great value to investors, right? And that's so that's essentially inclusive of both asset management and property management in that case. Or, I mean, obviously there's all the handyman expenditures, but it's not really like there's still a property manager expense otherwise. So is that what that's including, or is there like a separate property management fee or other fees?
It really depends on the property, but to give you one example, so we have the property management fee for Miami, for example, 5%. We also have a CapEx sweep because anyone that has owned real estate knows you have to have a rainy day fund. So we have 10% that we put aside for that. And then beyond that, there are no top line fees, but at the end of the day, Cloud Castle still retains 20% equity in Miami. So after all expenses are paid, we keep 20% because we have also put money and time into the property. So we try to make it fair for all parties involved.
But the 20% equity in that case, is that correspondent to the equity you guys invested, or that's sort of like in part compensation for a little bit of both? I see. I understand. Got it. So there can be like some equity compensation, some direct property management fee, but generally to an investor, like between either equity or straight out cash in a fee basis, like what is the general percentage expense that they would expect for, it's obviously like a lot of work that you guys are doing, right? So it's great value, I'm sure, either way. But what is the general expense? It's kind of within 5 to 10% range, or could it be more?
Yeah, I mean, it depends on the property and the urgency around it, because like, for example, like if we have an alpha investor who's willing to donate, or invest, donate,
give us free money, guys.
Actually, if you have an
alpha
investor
love to have it.
who wants to donate, let us know.
We
don't have any of those.
Let's say through the app. Let's say through the app for the passive investors, that is.
Yeah, so the passive investors we do have a higher markup on passive investors because they're not doing any, just they're clicking 4 buttons and then they own real estate. Like that passed. So the big thing here is around the alpha investors. That's why they're called the alpha. Like they're the nucleus of the primary investor here. So they're kind of our core demographic of users for the initial part of the onboarding the property. And so it kind of depends around the urgency. For example, like if they're willing to do like 85% of the funds, and that's just what they want to do, then we have to come up with the rest of the funds to onboard the property and renovate the house. So potentially, like based on the urgency of the onboarding, like we have to close that house and get that going. So we'll offer folks a more attractive deal, or vice versa. If we have a really profitable house and we just have a ton of equity left in it, we're just making money, we're not going to give a great deal because we already know the house is making us a ton of money. So it's really dynamic. Every house is every point of the sales process is very different, and our model is constantly changing. So we're on like a version 1.2 right now. We're moving to 1.3. So we don't really have we're a software company, so everything's very dynamic and automated to get.
But I'll tell you this, just to finish the point, there is, regardless of what we do, we have a minimum hurdle rate, at least double-digit cash on cash return. So even if you get a lesser deal than somebody's in the alpha investor program, our goal is still to give you double-digit return so that your money is better spent here than elsewhere. So that's kind of our North Star for whatever we charge our investors to work with us. Right.
But do you participate in a profit split in a way, like besides your own equity investment on the, let's say on the LP, call it, portion of the investment or portion of the overall structure? Do you guys have a profit split on that, or is it more like, okay, you get a fixed property management fee, you get fixed equity, and that's kind of that perspective? I'm just trying to
more straightforward. So like when we get to the point where we start doing syndications, then we'll get to those models. But for right now, it's pretty straightforward.
Got it. Yeah. And then what about like acquisition? So for acquiring a property, so let's say if I participate in a project, like in you're acquiring the property, am I charged something up front at the purchase? Because that's, I mean, that would be expected. That's not surprising. That's pretty much kind of makes sense in the real estate industry. But is there like a 2% fee or things like that? I just, again, like I try to make a comparison versus the rest of the, perhaps it's more, unique, but versus the rest of the real estate industry.
Yeah, so our ultimate goal is to scale. So we want to honestly offer a very reasonable, or frankly, if you can find a better deal in town, please let us know, because we want to beat them. Like, we want to scale to our goal is to scale to 1,000 properties. That's our end goal. So if we don't make a deal off of properties, it doesn't matter, because we got a property, and we're trying to go ultimately to the long-term vision of the company is to go own enough real estate that will go actually pivot. And we believe that the core issue with American housing is that there's frankly not enough of affordable housing. So we want to pivot the business model into more development, and specifically automation around real estate development, meaning like we would lower the price of homes through automation dramatically. So that's the long-term, like 5 to 10 year vision of the goal. Is we're not going to be an Airbnb rental business. We're going to be a development automation business to reduce home prices for the American consumer.
Mm-hmm.
So directly answer your question, we do not charge acquisition fees right now. And if we continue to scale up, then hopefully we won't have to get to that point.
So how do you guys plan on finding so many deals, like 1,000 deals, right? Pretty much. It's what is your strategy around that? It just, I mean, obviously, like some of the data approaches that you're using, and machine learning, and that it's challenging to find. I would say it's not so challenging to find the cash flow of that. It's pretty challenging to find kind of the equity side to pay a good price, like in that. Mm-hmm. So that's kind of the usual, at least for me, if I wanted to buy, let's say, like X number of Airbnbs myself, that's going to be kind of one of the first thing I think about, okay, I'm going to get the cash flow. I'm going to find those deals that have amazing cash flow, but am I going to pay a, relatively high price as well? And or sort of like the market price, and like what's the exposure to that and so forth, also in there potentially a recession. And what about like revenue in the recession? Like, have you guys seen, like, be it from AirDNA or, other analytics on like Airbnb? I'm curious myself, like Airbnb revenue in a recession, let's say.
Yeah, I can speak to the revenue, and then I'll let Brian handle the first question. But what we can tell you is that you don't want the market that is going to suffer in a recession. You want a market that is pretty recession proof. So either within driving distance or high tourism numbers is what we tend to look for. Because Tahoe, as you all saw, we launched that in December 2020. That was smack dab in the middle of the pandemic, but we still generated a huge return because enough people didn't want to fly, but still wanted to get out of their house. So the Bay Area, huge market, plenty of people that travel from the Bay Area to Tahoe. Same deal for Miami. It's been pretty consistent because you get high tourism numbers as one of the top destinations in the country. So we feel pretty confident about the revenue numbers that we pull from AirDNA and Rabu, because it backs up the thesis behind where you buy matters. And then Brian can kind of speak to acquisition, to how do we get to 1,000 homes?
Yeah, I mean, there's, I'm not gonna lie and say I have all the answers to get to 1,000 homes. That's kind of like a longer term strategy. But I think at the end of the day, you have to just, if you want to build, like, be a little more recession proof, I think frankly, like, people still take, like, with a recession, typically like 1 out of 5 people, 1 out of 4 people lose their jobs. Like, but the other 4 still take vacations. They might not spend as much money. They might just kind of, luxury brands typically get hit hardest in recession. So I think offering a really affordable rate or a really affordable property is, in a less competitive, or where there's not as many competitive comps, is probably your best bet for being a little more recession proof. As far as how to get to 1,000 homes, I think, we're going to start on the automation sooner rather than later, as far as like how amenities are done, how the properties are acquired. For example, I mean, if you look at Open Door, I mean, they have more than 1,000 homes in their iBuying strategy. Lots of companies like have gotten above it. 1,000 homes is not that many homes, frankly. It's like pretty small. There's like probably within like 100 miles of all of us, there's a lot more than 1,000 homes. So it's actually not that much of it. Like, sorry, go ahead.
So do you guys want to like set up, do you guys want to set up your own AVM perhaps, or sort of like open door, like automated valuation models, or?
Yeah, we'll get there.
Or not?
We're still early stages now,
That's
but
a good.
we'll definitely get there in terms of different creative ways to acquire properties.
No, just some ideas.
Yeah, thank you.
Got it. No, that's really great. And yeah, I hope you guys make it to 1,000 houses. That's an amazing go there. And I think you have a great system. I really like it. And thank you guys for being here tonight. If anyone has any last questions, feel free to speak up before we wrap up.
And if there are no questions, again, we thank you because we know you could have been anywhere. You could have been doing anything right now, but you showed up here. So thank you to everyone that showed up to watch this presentation.
Thank you all very much. We appreciate it.
Thank
you,
you, guys.
Thank you as well. And what's the best? Thanks, guys. What's the best way to reach you, Jimmy and Brian?
Yeah, it's our name, either Jimmy or Brian at cloudcastles.io. I'll throw it in the chat. Oh, you did? Okay, great.
But yeah, we'd love to hear from you, even like just thanks or your interest on properties, or we'd love to just talk about it and get your feedback. So again, thank you all for the time.
Awesome. Okay, make sure to check their website as well. Everyone, I think it's great. So that's perfect. Thank you so much. Have a good night.
All right. Thanks, everyone.